Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, I'm Vinay Joseph and welcome to another edition of What is Driving the Market, where we look at key market events and address key questions on investors' minds. In today's podcast, we highlight why we have had a preference since the start of the year for large cap equities over mid cap and small cap equities. YTD 2022, large cap equities of the Nifty index is down around 12%. However, the mid cap index and the small cap index have seen a deeper correction, down 15% and 27% respectively. In our view, the outperformance of large cap equities is likely to continue given three factors. First, macro fundamentals are supportive of large cap equities outperformance. 2022 is going to be the year of transition to mid-cycle, as faster policy normalization by the US Fed and the RBI, a rally in crude oil prices, and worsening of India's twin deficits drives bond yields and interest rates higher. Volatility is likely to remain high during this period of transition, with equity returns much more modest and mirroring earnings growth. Historically, during this mid-cycle environment, large cap equities tend to do better as they provide a greater margin of safety during periods of heightened volatility. The second factor is that large cap equities have had a superior earnings delivery compared to mid cap equities. The Nifty index has delivered 35% earnings growth for the fiscal year 2022. This is the highest EPS growth since fiscal year 2004 and follows a strong 15% growth registered for fiscal year 2021. Mid-cap equities, on the other hand, has delivered subpar EPS growth of only 9% for the fiscal year 2022. Though EPS growth expectations for the mid-cap and small-cap equities for both the coming fiscal year 2023 and 2024 is higher compared to large-cap equities, EPS revisions, which in our view is much more important, is much higher for large cap equities, where we continue to see positive EPS revisions. Compared to that, we see EPS cuts for mid cap equities and small cap equities. Lastly, large cap equities have a much greater valuation comfort. Despite the relative outperformance of large cap equities compared to its mid cap and small cap peers, the valuation premium based on the 12-month forward PE ratio of mid-cap equities to large-cap equities remains high at 19% compared to a 15-year average historical discount that mid-cap trade at of 1%, thus not yet providing an attractive entry point for mid-cap equities in our view. So that's all for today. If you like the podcast, please don't forget to subscribe. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.